Well, with some big global funds swearing off oil and gas investments, I got perspective on how the Canadian Pension Plan Investment Board is assessing the investment risks in the energy sector. Of course, they run about $400 billion. CEO Mark Machin spoke to us about this opportunity, and it comes at a time when the company just did a $6 billion deal to buy a renewable energy company. Machin says they're becoming more aggressive when it comes to factoring climate change into their investment framework.
We believe in climate change. Climate change is happening, and it's a huge risk, and it's a multifaceted risk. It's very complicated. So there's geographic change that is happening, there's regulatory change that's happening, there's consumer behavior change that's happening, and there's many different aspects to it. So it's important as an investor that we understand all of those risks and what's changing, how fast the energy transition is going to happen, and that when we look at every investment, we understand all the risks that climate change could present to that investment. So we look at things through a bottoms-up lens. Every single investment, every meaningful investment we make, every significant investment that goes through our committees has to explain what the climate risks and opportunities are. And likewise, we try to understand all the risks that are in the portfolio overall when it's all consolidated into the portfolio.
And so because this is becoming more front and center for CPPIB, can you give us a sense of what's driving that? Is it a greater public policy decision, or is this still within what has always been the CPPIB's number one reason for existence, trying to earn return?
It's purely through what legally we're asked to do, which is maximize returns without undue risk of loss. But it's become clearer and clearer over the years that it really is a profound risk, particularly as a long-term investor. When we look over the horizon that the Office of the Chief Actuary measures us over for sustainability, which is 75 years, there's going to be profound change over that time frame. So we have to. We're obligated to understand the risks. But this is not new for us. We've been on this risk for 10, 11 years now. So we're about to publish our Sustainable Investment Report tomorrow. And we've been on climate change risk for the last 11 years. It's becoming, we're able to understand the risks in a more granular way now because of some of the tools and the disclosure practices that are really improving with the companies.
Does that mean that you are not interested in making investments in Canada's oil and gas sector?
No, we'll look at everything through that risk-return lens. So as long as we can understand all the risks behind the investment, if it's in a pipeline and we understand all those risks, that regulation may change, that preference may change, that geography may change, all those things, if we can understand those and we can still be compensated sufficiently in the return that we expect from that investment, then we'll continue to make that investment. So we have substantial investments in Alberta. We'll continue to do that. Now, we also have substantial investments in renewables as well, and we have an investment in Alberta, which is interestingly in carbon capture as well.
I just wonder if you plan on getting more aggressive in Canada's oil and gas sector at a time where many people look at the cash flow that a lot of these companies are spitting out and these record low valuations that many chalk up to just a perception issue or the inability to build new pipelines. Doesn't that create fertile ground for a big private equity portfolio such as yourself to be aggressive?
It might do. So we certainly we'll look in the oil and gas sector, we'll also look in the renewables sector, and we'll look across the energy spectrum for opportunities. So I'd say, we recently in the last couple of years backed the Alberta Carbon Trunk Line project, which is involved in carbon capture. That received some provincial government support to make the economics of that sufficiently attractive for all the investors around that. We'll look for renewable power investments. The biggest one we've ever done. We just announced yesterday the acquisition of Patent Energy for over $6 billion. And we have substantial renewable power investments in Ontario, and also we have a substantial joint venture with Enbridge as well. But yes, we will look at traditional oil and gas, whether it's pipelines or other resources as well.
What do you make of some pension funds that are swearing off the sector altogether, whether it's pension funds or endowment funds?
Yeah, it depends on what their objectives are, what they're asked to do. And certainly, we think it's a big risk in the world. And it's a complicated risk to understand. And it also depends what your objectives are. So if one of your objectives is that you should be trying to decarbonize the planet, then it's something that you should look at carefully whether you continue to invest. If all of your inflows are coming from carbon investments, then it's something that maybe you should look at as well. We have this very simple mandate, which is, I say, maximize returns without undue risk. And so we look at everything through that lens. But it's complicated to understand these risks. And some funds say, look, it's just too complicated. I can't understand. I can't predict. I can't do the work to understand all of the risks around these investments. So I'm just not going to invest.
So as you try to put blinders on to whatever is going on politically, as long as it's not going to change the regulatory framework, I have to ask you about this broader movement that is starting to perk up, Wexit, and these fears of divisions that are taking place within our country. Do you see that as reality, as a material risk going forward? And underpinning that is those people say that Canada's perception abroad as a place to do business has started to diminish. Since so much of your portfolio is outside of the country, do you see that?
Yeah, so I would I'd say two things. On your second point about so much of our money being outside of Canada, when you look at Canada as a percentage of a world index, it's less than 3% of a world index. And we have almost 15% of our investment here. So we're not just slightly overweight, we are many multiples overweight in Canada. So that should be, in itself, a vote of confidence. And we should be overweight here because it's our home turf. We should be able to understand the risks better here, understand the opportunities better, and have confidence in the long term. So we're very comfortable with our very, very overweight position in Canada. And I think investors from around the world should look at our very, very overweight position and say, okay, well, that's a vote of confidence in Canada. With respect to regional politics in Canada, again, it's sort of above my pay grade. It's not something that that affects how we invest. So we're obviously we're mindful of risks, and we'll look at risks and regulatory change in any place we invest, whether it's in Canada or anywhere else in the world.
What about the perception issue of Canada as a place to do business for those that are abroad?
Yeah, so when I go around the world and I talk to people about Canada, Canada's got a terrific brand. It's got a brand of pragmatic people, international people, very diverse population, very educated population. The values of Canada are respected and embraced around the world. So I think Canada is a place generally, and Canadians have a wonderful brand in most parts of the world. And so, as a place to invest, I think, like with every country in the world, stability of regulation, stability of tax policy, stability of in the investment environment is really key, and transparency over those things. And Canada's not a bad place on those things.
So, to I guess put it simply, many say, well, the country's inability to build a pipeline is hurting our image across the world because we can't get things done here at home, and it's affecting our perception when it comes to competitiveness. Yeah,
so I'm going to keep away from politics. But by nature, we're arm's length from politics. So our job is just to evaluate every investment opportunity when it comes along. I think infrastructure generally is politically challenging for almost every government in the world. It's very hard to navigate because it affects everybody's lives, and big infrastructure projects that touch the environment and touch other things. they are, people have very passionate different beliefs on them, which I think governments have to navigate.
What about global energy opportunities? Saudi Aramco finally announcing that they are going to go public, selecting Riyadh as the market. There are no shortage of potential risks and issues associated with that IPO. Will CPPIB at least take a meeting to hear what the company has to say?
Yeah, we'd certainly, we understand what the company has to say. It's not, so when we look at emerging markets, we're very focused on the emerging markets that we invest in. So it's 5 countries in South America. It's Brazil, Chile, Peru, Colombia, Mexico. And it's a few countries in Asia. So we're not invested in the Middle East. We're not invested in Africa. We're not invested in frontier markets. We want to invest in markets where we can do a lot of different things, where we can invest in infrastructure and real estate and public markets and private markets and credit and equity. So we get a really comprehensive picture. And so we want in markets that have real scale and lots of different ways that we can invest. So the Middle East has not been a target market for us. It's not a market that's on strategy at the moment. But I say the other markets in Asia and South America are.
So even though it could be the world's biggest IPO, because it's not in the home market, it probably wouldn't screen for you.
Yeah, exactly. It's not in one of the strategic markets for us.